And markets remain on edge as US President Donald Trump called for the immediate evacuation of Tehran. Trump also cut short his visit to the G7 summit in Canada and asked the National Security Council to be ready in the Situation Room, sparking speculation of a possible US military involvement. The situation escalated further as Israel struck Iran's state broadcaster and uranium enrichment facilities. Meanwhile, Iran reportedly sought an immediate Trump-mediated ceasefire. The ongoing conflict marks the largest ever direct confrontation between the two nations. The geopolitical tensions triggered a wave of risk-off sentiment in the global markets. S&P 500 futures slipped 0.46%, while European futures fell 0.69%. Oil prices jumped briefly by more than 2% before stabilizing. Brent crude was last up 0.34% at $73.47 a barrel. Gold gained 0.5% as investors moved to safe havens. U.S. Treasury yields also declined, with the benchmark 10-year note down about 2 basis points to 4.43%, indicating a flight to safety. The U.S. dollar strengthened against major currencies, including the euro, yen and the pound. Away from geopolitics, investor focus remains on central bank decisions this week. The Bank of Japan is widely expected to keep short-term rates steady, but markets are closely watching for signals on potential changes to its quantitative tightening strategy. Japan's 30- and 40-year bond yields held steady after recent auctions showed waning demand. Meanwhile, the Federal Reserve is also expected to hold rates steady, but traders are pricing in 2 rate cuts by the end of the year. With rising geopolitical risks and uncertain trade policies, central banks are navigating one of the most complex macro backdrops in recent years.